You're listening to Uranium Spotlight on Tuesday, August 27th, 2024. Brought to you by Pure Point Uranium Group, your exploration partner in Canada's Athabasca Basin. Amidst surging uranium demand, Pure Point's continuous 2024 exploration across their vast portfolio, backed by industry giants, underscores their focus on the next major discovery. And now your host, Chris Frostad.
This week on Uranium Spotlight, Kazatomprom reduces forecasts. Thorium-fueled reactors make a debut. India leans even heavier into SMRs, and Fission postpones its acquisition vote. Last week's uranium spot market remained flat, closing the week again at $81 US per pound U3O8. Uranium market activity showed a mixed but notable trend. In the spot market, moderate demand spread over a 12-month delivery window, leading to 9 confirmed transactions with a strong focus on prompt deliveries. Utilities, especially non-U.S., became more active, likely due to the prolonged lower spot prices and the upcoming WNA symposium. Early in the week, spot price had dipped to $80 a pound, attracting buyers and resulting in a rebound to $81 by week's end. In the term market, the August long-term price ticked up $1 to nearly match spot at $80 US per pound U3O8. Activity picked up with 8 contracts booked, primarily for mid-term delivery in 2025 to 2026. Non-U.S. utilities remained engaged, evaluating offers for various delivery periods extending into the 2030s, while U.S. utilities focused on long-term delivery options. No new formal utility demand emerged, but several utilities are expected to enter the market post-WNA symposium with new RFPs. Overall, the week reflected a cautious yet strategic approach by market participants, balancing current price levels with future demand expectations. Kazatomprom, the world's largest uranium producer, has updated its 2025 production forecast, causing uranium prices to rise on Friday. The company cited construction challenges, a new project, and a shortage of sulfuric acid as the primary reasons for lowering its production outlook by approximately 11 million pounds. Initially, Kazatomprom had projected producing over 69 million pounds at the high end of its estimates, but it now expects to produce a maximum of just over 58 million pounds. That's a reduction representing 17% from previous guidance and has heightened market concerns about the company's ability to meet its production targets. The news had an immediate impact on the market, with Western uranium companies seeing their stock prices surge. Canadian firm Cameco Corp experienced a 7.2% increase. U.S.-based Uranium Energy Corp rose nearly 10%, and another Canadian company, NextGen Energy, saw a substantial 13% jump. Investors seem to view this development as a relief, given that Kazatomprom's reduced production guidance alleviates fears of significant year-over-year increases that could flood the market. Kazatomprom's revised production figures are significantly below the allowances set by its subsoil use agreements with the Kazakh government. The company had previously aimed to utilize 100% of these allowances, but is now forced to adjust its strategy. This shift is further complicated by delays in developing new deposits, particularly the Budenovskoye deposit, which is experiencing significant ramp-up issues that are expected to affect not only 2025, but also 2026 production levels. The shortage of sulfuric acid, a crucial component in the in-situ leach mining process, is particularly affecting Kazatomprom. The demand for sulfuric acid from Kazakhstan's agriculture industry, which uses it to produce phosphate fertilizers, has further constrained the supply availability for mining. Kazakhstan's agricultural sector is substantial, being the world's 6th largest wheat producer last year. This shortage, combined with delays in the approval of design documentation for new projects, is putting additional pressure on Kazatomprom's production capabilities. Despite these challenges, Kazatomprom still expects to increase its production by 7.1 million pounds over 2024 levels. However, this rise will not be sufficient to close the long-standing supply deficit in the uranium market, where demand has at times outstripped supply by as much as a third. The ongoing supply disruptions and increasing production costs, partly driven by the new mineral extraction tax, or MET, in Kazakhstan, are likely to push up the global cost curve, making Western uranium projects more attractive in comparison. With Kazatomprom producing close to 40% of global uranium supply, these production updates are crucial for investors. The market's reaction suggests that investors believe these supply challenges will continue to support higher uranium prices, benefiting other uranium producers globally. As Kazatomprom grapples with these issues, Western uranium equities are well positioned to capitalize on any sustained increase in prices driven by the company's production difficulties. China is currently constructing a thorium molten salt reactor in the Gobi Desert, marking a significant step in nuclear innovation. This reactor will be the first commercial thorium-fueled reactor globally, utilizing liquid thorium fuel, which is designed to be safer than the solid uranium fuel used in conventional reactors. Thorium has a key advantage. It is far more abundant than uranium. However, for thorium reactors to significantly impact uranium prices, their adoption would need to scale up considerably. Presently, the market and ongoing developments heavily favor uranium-based designs. Additionally, all reactors currently in operation use uranium fuel, and with the ongoing supply-demand imbalance, uranium prices are likely to continue rising even as thorium technology advances. India has shown particular interest in thorium reactors due to its vast thorium reserves and limited uranium resources. Despite this, India continues to invest heavily in conventional nuclear reactors, while also dedicating substantial resources to thorium research. China's progress in thorium technology raises the possibility of future collaboration between the two nations, despite their geopolitical tensions, particularly regarding China's alignment with Pakistan, India's main rival. This situation highlights the intersection of geopolitics with the nuclear industry and the supply of critical minerals. While both China and India possess extensive thorium reserves, the real question lies in technology, and for investors in uranium equities, how this technology might impact uranium markets. This remains a longer-term issue with no clear answers yet. India currently operates 15 small reactors, though they aren't necessarily modular. Globally, many countries aim to build small modular reactors, or SMRs, to reduce construction times and upfront costs. A small reactor typically has less than one-third the power output of a conventional modern reactor. India is working to transition its existing small reactors into modular ones, a move supported by large conglomerates like Tata Group, which has diverse interests including steelmaking, automotive manufacturing, and home appliances. Once these reactors are modularized, they can be produced in factories, shipped anywhere in India, and assembled on site. The Indian government has branded this new type of reactor a Bharat Small Reactor, or BSR, named after an old term for India. Tata Group plans to build 200 BSRs to power its steel production and generate hydrogen for the steelmaking process, replacing the coking coal currently used. India aims to achieve carbon neutrality by 2070, but with measures like the European Union's Carbon Border Adjustment Mechanism imposing duties on carbon-intensive imports starting next year, Tata may accelerate its transition. The Indian government intends to deploy 40 to 50 SMRs within 8 years. This rapid expansion will significantly increase India's demand for uranium. Fission Uranium has postponed its special meeting of shareholders and option holders, initially scheduled to vote on the proposed arrangement with Paladin Energy Limited. The meeting will now take place on September 9, 2024. Although a preliminary count shows that a majority of votes support the arrangement, it still falls short of the required two-thirds majority. Nearly half of the votes are still outstanding, and Fission aims to provide additional time for those security holders to participate. Proxy advisory firms ISS and Glass Lewis have recommended voting in favor, and Fission continues to urge security holders to do so before the new deadline of September 5, 2024. This situation mirrors Fission's failed transaction with Denison Mines in 2015, where despite majority support, the required two-thirds approval was not met, leading to the termination of the deal. The similarity in outcomes highlights the ongoing risks in securing overwhelming shareholder consensus in the uranium sector, where even strong support may not guarantee the success of strategic mergers or acquisitions. Investors should be aware of these risks as they can lead to significant market disruptions and impact equity valuations. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with some of the largest uranium suppliers worldwide. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.